Hello everybody and welcome back to Only Divergences. In this video I'm going to do a quick update of the SPY, S&P 500 and the QQQ Nasadaq100 to see if they can tell us anything about what is going on in the market right now. This is an update of my previous video on QQQ where I discussed the analog between today's current correction and the correction back in March. So if you watched that video, the question is whether I went long at the close today. And unfortunately, the answer is no. The analog deteriorated very early in the morning, and therefore, as I said in that video, you cannot get married to a trade idea. The QQQ might move higher tomorrow, but the market is open 5 days a week, so there's no need to jump in when the setup is not optimal and is not in line with your plan. With that said, I still think we will get an interesting move higher this week, just not exactly how I predicted it in the previous video. Before we start, if you haven't subscribed to my new channel, do that right now. Join us, hit that subscribe button, have a strict technical analysis who has a track record. Go back and watch my videos. And who's called this correction. Have me in your corner. I'll be updating daily, so you can always check me out. Today is Monday, October 4th, 2021. Markets just closed. We are generally down today, and we stayed down after that move lower at the open. We didn't get a bounce, but we held the original low area towards the day, so that's a little concerning. All right, so here we have the SPY. I'm going to do the SPY and the QQQ in tandem because, with the small exception, they generally do trade in tandem. We have my usual exponential moving averages, the MACD indicator, the more sensitive DMI indicator or directional movement index, and I've added the ATR for this one for a very important point. As always, we start off on the weekly chart to provide context. It's only Monday and we already have a visibly negative week, visibly red candle here, essentially our fifth in a row. Now I know technically this one here was a positive week, but it was only a small positive and it got faded right away. And if you take a look at the QQQ, it's even smaller. So generally we've been down 5 weeks in a row now as of the close today. And again, look, I've been saying this for weeks. This is not a dip in a larger trend like we experienced for most of the year, in fact all year. But this is a break of that trend, and therefore market and momentum dynamics have shifted, and it will take the market some time to adjust. We can see going back on the SPY when large trends break, see like this one here and this one here, they go a long way before finding bottom. You see this one required us to get all the way down to the 200-week moving average on the SPY, and oddly enough, the COVID plunge was actually the 200-week on the QQQ. And what's concerning here is that the bigger the trend, and the bigger the break, the further before we get a real bottom. Now, I'm not trying to scare you. I'm just pointing out patterns that I see. You can come up with whatever conclusions you want, but you should know what I think and that I want to have an unbiased, sober view of what could happen in this market by only looking at the technicals. So, going into the daily time frame, we can see here that the SPY broke its trend weeks ago. Now, whether you're using the 50-week moving average as the trend, so you can see we held above it, just dipped down below it a little bit, but we had the 100, 50, 50 held there as support, just absolutely beautiful. And then here is when it broke. Or if you're using the straight trend line, which is this one here, I'm sure many have seen this, but I've been tracking this since about March, because that's when it became a real trend line. So this is not off of the lows, but off of the bounce. And then you touch here with the election night, which is when we had this bottom here, and then you just pull it all the way up, and you can see how that's functioned as support here and here, here, here. And we can see that we tried to hold it here. We actually bounced off that, but then we came down, we back tested it. So we just came back to that trend line to say hello, and then we've been selling off ever since. So if we go to the exponential moving averages again, we can see that we are cutting through this 100-day exponential moving average. You can see which it's now flattening out and rolling over compared to the upward sloping trend that we've had for most of last year. You can see that whenever we hit the 50 or the 100, I mean, you could say this was hitting the 100, the trend lines were always pointing high very strongly. And when we hit the 50 here, you can see it was almost already flat. No, it was flat, right? Where here, we didn't hit it, but it was still pointing up very strong, very strong, very strong. It was already flat. And now we hit the 100, and now it's flat, and we've closed below it 2 days in a row. So obviously, as a technician, this is concerning. Now, one thing I'll point out is that the QQQ is still giving us a little bit of hope. Now, although I do say that hope is not a good investment strategy, we still have to take a look at what I see here. So if we get rid of the exponential moving averages, we can see that there's a trend line here, and I pointed this out in the previous QQQ video. If you go back to the last time the Nasdaq or the QQQ touched its pre-pandemic high, so up here, so this is the pre-pandemic high, you just go across and you look at when was the last time it touched it, back here, you start that trend, and then you just pull it all the way, and you can see that it's supported here, 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 and we're now getting close to it, right? In fact, we're almost right at it, because trendline drawing is an art, not a science. So what I mean by that is that you can move it up here or you can move it down here. It's a general area, right? So really, it's basically now or never for the QQQ to hold this market before it breaks through that trend and market dynamics really start to shift. Now, this doesn't mean that we have to crash if we break through this level, but the argument for remaining bullish in this momentum market continues to lose steam. Now, we are pretty oversold, so we want to start looking to see if there are any circumstances in which we could have a good entry. But before moving on to the hourly, I want to point out the ATR, which is this blue indicator down here. Give it a second. Okay, let's put the moving averages back on. Now, I use the ATR because it tells me basically when a stock has reached its volatility crescendo. Notice that the daily ATR reading going all the way back to, let's say, 2017, 2018. What happens with the ATR is that it compresses, and then it expands as we have this volatility, and then it kind of peaks around the peak of the volatility. It's really hard to see here, but let's just do it one by one. You can see it kind of peaks there. It still remains high, obviously, because it's a trailing indicator, but then we have the same thing. Again, peak volatility, peak ATR, and generally that indicates the bottom of the move, right? Same thing here. So we had peak ATR here. Now this wasn't technically the bottom of the move, but it was the bottom of this big move here, and we had a nice bounce. And then the bottom of this whole move, again, coincided with very high ATR. You can see right there. Same thing here, same thing here. Well, this wasn't exactly the bottom, but this was a very odd sort of move because it was a lot of volatility right away, and then it continued with high volatility before righting itself. But you can see this best with the COVID plunge. You can see that we peaked with ATR right here, and then this year we have the same thing, right? Especially in March here. And what's happening now? Well, we're rising, right? So we are rising. So what that suggests, actually, even though I'm looking for a nice bounce, is that we might not be at the peak of price action volatility. And so that's in line with my view that even if we do get a bounce this week, I don't think that's the end of the correction. So basically the ATR is rising, and we want to see if we can find at least a near-term bottom. Similar, I think, to back here, right? When we did have kind of a bottom, we were able to go long 3 days in a row. That's really what we want, and if we can get that maybe with a Wednesday, Thursday, Friday, that would be a very interesting move. So one thing I want to do is I want to go quickly to the hourly, just to point something out before wrapping up here. In order to not get too complicated, all I will say about the hourly is this. We are very oversold. While we dropped today, it was kind of a response to the spike that we got on Friday. right? If you thought this was going to continue, this was a very tough thing to continue, as we were already very precariously high. We had moved 2% from that low, and we're in a downtrend, right? So you always have to remember that context. So what would not be surprising is that with this red histogram, negative histogram, and this move lower, is that we move higher tomorrow. Now, not materially higher. We could have a gap in reverse or a gap consolidation, but the near term does suggest that if we don't gap higher, that we get a very bad move. Well, we could get a gap reversal. That's what I actually favor. Maybe just a gap, comes up, comes down again, and then that would be a nice time to go long. Now, if that happens, it doesn't mean the correction is over, nor does it mean that we are going to have a nice bounce. If we get a move higher tomorrow, that would be a positive for the case for a material bounce, but so would a gap lower that comes up and bounces and comes back here, I think. That could form very interesting bullish divergence. Remember, guys, what this all boils down to is that the trend is your friend until the end when it bends. While I am still looking for a bounce, I will say I do not really see any real panic in markets or in the news. I notice many are still treating this like a dip, even though they are getting crushed. So you know my view. I want a perfect divergence move sometime this week. It should be relatively soon. And I want proper entry. And I'm going to wait until I get it. But I favor it happening this week. So if you found this useful and interesting, join me, join us, hit the like and subscribe. Watch my other videos where I outline previous trades from a strict technical analysis rationale. And above all, do not go through this correction alone. Okay, I'll see you tomorrow after the markets close, and have a great trading week. Take care.